The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, 877-927-6648. We're going to start the show with the NASDAQ, looking at it on an hourly basis over the last 2 months. I wanted to focus on these full moons and new moons that we've been having since we made our high on May the 28th at the super full moon. And then we had another super full moon that occurred on June the 23rd. We are now coming into the new moon. And if you remember from Tom Pelk's work that in usual markets, bull markets, if you buy on a new moon and sell on the full moon, you do 16 times better than the buy and hold methodology with the S&P 500. But if you reverse the process and you're in a bear market, if you sell on the new moon and buy on the full moon, you'll be far better off. And this appears to be what could be happening at this particular time. It's still a little early. We're still up a little bit on the day. We did make a higher high overnight in the U.S. market. Some of the other markets, of course, did not, but the U.S. market did, and that's what the ones that we're in, so that's what we're watching. So the price objectives have all been met. The important thing here on a technical basis is from the high we made in May to the low we made on June 24th. That was a 30-day period. The market rallied back to a 61% retracement in the S&P, the Dow Jones, and also in the NASDAQ. So if this is a top, this is the time, this is the place, and we should start moving down either today or tomorrow. Now tomorrow we have one other thing that occurs, but it has a orb. In other words, it can work from anywhere from 1 to 3 days for it to happen, and that's the combination of the Sun and Mercury and Venus, known as combust. Now, Mercury and Venus move back and forth around the Sun quite quickly because they're shorter-term planets. The Moon is a satellite. It's not even a planet, and yet it's the one that moves our, tides and everything like that. So you can imagine what could be the electromagnetic impulse of a planet like Mercury or Venus. If the Moon can do that, what can Mercury and Venus do? We don't really know. All I know is that if you go back in history and look at this particular thing called combust, it was work that was done by an Indian astrologer back in the 1930s called T.G. Butani. And he also wrote about this particular aspects, and what we did was we went in and tested. In fact, we tested all of these aspects empirically. We went back to see if not only the thing worked, but we did it backwards. We went back on charts going back about 100 years. This was before we had really sophisticated computers. We're going back, 35 years ago when Dr. Miller and I and Jim Twentyman were working on this. Is that we would pick a low date like, August the 9th of 1982, and we went back into the ephemeris and checked to see what was happening at that time. And if we saw certain characteristics, we would write those down, and then we would move forward to check to see the next time those characteristics occurred. Well, one of those things that happened all the time was combust. It happens 4 times a year, so if you go back 100 years, you're going to get 400 samples, so you're going to have a pretty good idea statistically if it actually works. We've got a call coming in today. Boy, what a lucky day it is today. Lou, are you there from New Hampshire?
Yes, I'm here.
What can I do for you, my friend?
Just wondering if oil has much more upside.
Well, I don't think so. I'll cover the oil market a little bit later, but my objective was 103, and last night I happened to be watching it because my beepers were going off, and I noticed that it went from 102.60 to 104.10, and it did it with 15 contracts. I was watching the bid and ask, and I couldn't believe it moved $1.50 with 15 contracts, and so it did go up there. Then it broke a couple of dollars. So my assumption is that we're pretty close to a pretty significant high in crude oil. I've been waiting for this 103 level for quite some time. That's quite a few ABCDs come together there. And once we went above the 98 level, that's what the next price objective was. So I think we're close. That's all I can say.
Okay, so some puts in the futures may work.
Well, I think so, because if they go above 105, you're probably wrong. So you don't have to risk very much at that point. And, of course, the puts, do have a time decay, so be careful with those. But if you can buy one cheaply, then I think, and not go out more than, 45 to 60 days, I think it could be quite profitable.
Sounds good. Thank you, Larry.
Thank you for calling in, Lou. I certainly appreciate it.
Sure. One more. The euro.
Sure. Oh, the euro. That's a dying quail. I mean, when we got up to 134 2 weeks ago, that was our focus of the newsletter that week, because we were right at a Gartley on the weekly basis at the 134 level, and we broke well over 600 points. Down into the 128 level, and all we're getting now is a little bounce back. But it looks to me like the euro has got 122, written all over it. The question is if we get a big rally from here or not. I'm not sure, but the trend is certainly down, and the easiest thing is to sell rallies. That's what I see.
Okay, great.
Okay, my friend, you bet.
Yeah. Bye-bye.
Okay. All right, we'll get back to this super full moon and new moon things, because I think we're over a major spot here today. Yeah, it might not work, but this is exactly what you're looking for on a long-term basis. We've made those bigger tops that we looked at, and now what we're waiting for is this is a retracement back. It's taken 8 days to get here, which is right in the ballpark of what you want to be looking at from the full moon of June 23rd to the new moon of July the 8th. This is what we're looking for. I mean, and when they work really well, folks. So just keep in mind that it's all probabilities, and nothing more than that. Now, I wanted to bring up. I wanted to show the pattern from the FTSE, which is the London market. And hopefully I got it into Tiger TV okay, but it goes back over a 13-year period, and it shows the beautiful ABCD pattern that occurred, going back from 2003 to 2007. Then we had the collapse that came down and almost made a double bottom down there, and then it has gone up and made a perfect ABCD, and also it did it in time. In other words, it went up from 2003 to 2007, and then from 2009 to 2013. But the important thing to look at on the chart, and I've marked it, is the 1, 2, 3, 4, 5 expanding triangle. That is the T6 pattern that was popularized by H.M. Gartley in his book Profits in the Stock Market. That pattern is the most highly predictable of all the patterns that we use. It is better than 85% accurate, and as you can see, the FTSE has broken quite a bit down from the high. It's broken over 15%, and now it's having a little bit of a rally back. Now, I know most of you don't follow the FTSE, most of you don't trade it, but this is the same pattern that we have going on in the Dow Jones, the NASDAQ, and the S&P. It's in the FTSE, it's in the French market, it's in the German market, it's everywhere. This is an extremely bearish pattern, and that, is why I want to bring it to your attention that there's something not right in Denmark, as the old king used to say, and there is, this is something that I think is very, very important. Now, if we take it just a little bit further, and I won't spend a lot of time on this because I know that you folks have, don't have a lot of interest, but it's a good teaching tool, and that is if we go down to the daily, you'll see that we're making another smaller ABCD on the daily, coming in also at the 61% retracement, and that also, sets up a head and shoulders pattern over the past 6 months, and that also is a very negative pattern. So we've got these negative patterns, coming everywhere across the market. Now, I'm not a fundamentalist, and, these patterns don't work all the time, but when you see them in all markets across the globe, it certainly, bears really strong resemblance that something is really not right somewhere. Now, I wanted to talk a little bit about Japan. We'll get back to the U.S. markets, but these are important because, they do have global ramifications, and people have, they're on TFNN and all these other places, and they're telling you to put your money in Japan or whatever. And if you can see, this is the Nikkei going back more than 25 years. And you'll see that the retracements that we've had in the last 20 years, there was one at 61% retracement, and the last three have been exactly 786 retracements of the previous high. Now, this is not a random event, folks. This market is following along with the geometry of the market incredibly well, and we've just completed, that 786 retracement 2 months ago in the Japanese Nikkei Dow. And we've had a pretty big sell-off, and now what we're doing is we're making this retracement back, much like we are in some of the other markets. I'm going to bring it up in a shorter-term time frame so that you can see the what's happened over the last 2 months. The fact that the market, made the top, dropped 20%, and then has had a 61% retracement and had a down day after opening, after being a little bit higher. So it went exactly to that number at the 61% retracement, and so that tells us that there's a very strong probability that this is good resistance in the Nikkei. So we're seeing the same thing across the board in the stock markets of the United States, the stock markets of Europe, the stock markets of London. Well, London's part of Europe, but and then also we have the Asian markets that they just look absolutely horrible. We've got another caller today. Boy, today's a lucky caller day. Ronald, are you there?
Yes, I am. How you doing?
I'm good. What can I do for you?
LINE. I bought some on the drop, but I bought it a little early, so I've got a loss in it. But it looks like it's coming back. That's LINE. It's Lynn.
Okay, give me 1 second, and I will put this into my database. I don't do a lot of stocks, but I know charts, and if it's got a chart, I'll be able to. It's trading around 25 and change. Is that correct?
Yes, 25.97. Yes.
Okay. Yeah, it's had a pretty big down move recently, and it's having a little bit of a bounce. This is made some type of wow. This has had a really big drop. I don't know where you got in this thing, but this looks like a dying quail. I would. Did you buy it around 30?
No, I got my average cost was around 27.
27. I'm going to give you some advice here. I don't know if it's good advice or not, but I'd get out of it if you got back to even.
Okay.
The reason why is, first of all, it topped in October of last year, long before the rest of the market. And let me check one other thing for you here. Ronald, we've got to take a break. Will you stay with me? I think this is an interesting chart, but hold on with me, please.
I will.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we have Ronald from Connecticut on the line. Ronald, I put up the weekly chart for Line, L-I-N-E, and, I basically look at things a little differently than most people. I'm more concerned about how much I have at risk as opposed to how much I'm trying to make. And when that market was coming down last week, it was coming down so very, very hard that I would have had a tendency to wait. And I know you bought it around 27 and change, and you're about $1 or so underwater. But frankly, with that big move down, you went below the 61% retracement at 23, and so your risk at this point is a little bit more than 10% on the value of the stock. So what I would suggest, and this is my money, not yours, okay? So remember that. I don't have any skin in the game, and you do. What I would do would be to take off my position if I got out at break even, and if I didn't get out at break even, I would certainly have a stop just below 23 to protect myself, because the big move down, when a stock drops, almost 15% in 1 week. Especially a stock that trades, pretty good volume like this one does, I think someone either knows something or there's a problem that they haven't told us yet.
Right. Well, you want to hear the news on it? I can briefly tell you the news. Yeah,
sure, please do.
The SEC is doing an informal investigation of their non-GAAP accounting and the company released the information. It didn't have to, but it released the information last week, and that's what caused the price to drop. And Bank of America this morning said their target for it is 30. They've lowered their target from 41 to 30. So that's what's caused the price to come back up today.
Well, let me say something. If they've lowered the price between 41 and 30, that tells me the Bank of America is underwater also. So I would be careful.
Yeah.
Remember, the bank analyst at Bank of America might be 23 years old, about 4 months out of school too. He might not have a whole lot of experience, so just keep that in mind.
Right. Yeah.
I would prefer to get out of it at close to even as you can, and then reevaluate the stock a little bit later, especially when there's news out there, because I believe where there's smoke, there's probably something burning in the wood somewhere.
Right. Okay. Well, thank you so much.
Yeah, you bet. It's more risk control than anything else here, Russell.
Right. Okay.
Okay. Yeah, thanks for calling in. You bet.
Uh-huh.
Okay, we were talking before. We were talking about the stock market, of course, and what we're seeing in some of these markets that we're watching. Now, the next one that I wanted to cover is the gold market, because we've had a big move in gold on the downside, and what we're trying to do now is, if I can find the chart, just give me a second here, and I will get it here for you. And I wanted to show you the daily chart on this, because we have been waiting for this. I wanted to show the weekly chart. Hold on just a second. Yeah, there's the one I wanted to show. The weekly chart on gold shows us that we've come down and we've touched the 61% retracement that we were looking for, coming off of the 2008 low from October. That was down at the 1170 level. It got to 1177. Last night we've had a little bit of a bounce of about from 1170. We've rallied all the way up to 1133. And has held that level at least for a short period of time. The easiest way to trade gold is to move down to a smaller time frame, and then you're able to see, some of the things that make gold, go up and down and make it such a good trading vehicle. And I'll put into Tiger TV the chart that I'm looking at in gold, because after that low was made, we tested the 1206 level. Remember, we had a $100 rally from 1177 to 1267, which was almost $100 in just 2 days, and then we backed off to a 61% retracement at the 1212 level. We went to 1207 was the low, and then last night we had a rally of about $25, and then we pulled back to exactly a 61% retracement at 1215, and then we went up and made a larger ABCD correction up to the 1237. Now our game plan here is we're looking to see if we can buy gold now if it backs off into that 1222 level one more time. That's down about $11. And the reason for that is that we would be having 3 higher bottoms. Folks, we got to take a little break here. 877-927-6648.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we're going to take a look at the high-yield bonds now, also known as junk bonds. And as you can see, they have broken down badly. Very similar to what has happened to our Treasury notes and Treasury bonds. The interesting thing is that the Treasury notes and Treasury bonds have taken out last year's low from June, whereas the high yield bonds, which should be the junk bonds, have not. And the reason for that is people are searching for yield, so they're willing to pay up for it, which I think is the wrong thing to do, but unfortunately that's the way the market looks at it. But anyway, it just shows the how badly the market is getting hit. And if you want to take a look at the muni bonds, well, we're going to look at those on a little bit longer term time frame, going back on a weekly basis, and you can see that we've come down to a 786 retracement of the 2011 move in the muni bonds. And if we get muni bonds anything under 99, they're going to be under extreme pressure. Now, we're very, very oversold in the bond market, so we're due for a bounce back, and that's probably all it will be, because we have broken some major support in both Treasury notes and in Treasury bonds. If we take a look at the Treasury notes, on the weekly chart, you'll see that after we completed the head and shoulders pattern that occurred over 2011 to 2013, it was a beautifully symmetrical one. and it has broken down and it stopped right at the 61% retracement as we speak. Last week we stopped at 124.12. We're having a little bit of a bounce from there, so this is where we would expect the Treasury bonds to have and Treasury notes to have a little bit of bounce from this level. But overall, we're looking at something that is rather sinister. We should expect probably about a 4 or 5 point move in the Treasury notes. That would mean that rates would move around 30 basis points from where we're trading now. We're close to right at 3%, I believe. We could get back down to that 270, 260 level on yield, and then we would start down. The long-term picture in the bonds and notes is incredibly bearish. That butterfly pattern that we looked at over last year and this year is still in effect. That 32-year bull market in interest rates, i.e. lower rates, higher bonds, is pretty much over, at least from a technical standpoint. I don't know what the Fed can do about it, but that's what it looks like from the charting perspective, and the markets are starting to move in that direction. Frankly, I think Bernanke's got to be the luckiest man alive because he doesn't want to do another term, in my opinion. So I think Obama's giving him a way out, and of course he can go into private sector and trade the euro for Citibank and get paid probably $5 million a year for that, or maybe more. Who knows? So that's what we're watching with the Treasury notes. We have to when we're watching the I've lost something. Oh dear! Give me a second here, and I'll try to get it back up. I wanted to bring one chart to your attention. It is the U.S. dollar index on a daily basis, going back to last August. So we've got a whole year in here, and this chart has really got some incredible patterns in here, and they are related to that expanding triangle pattern that we've talked about earlier in the show. In fact, I try to mention it every time that we have a show because it's such an important one, but fortunately we have a guest calling in. Charlie from Atlanta. Are you there, Charlie?
Yes, I am, Larry. How are you?
I'm good. What can I do for you, my friend?
Well, you were just talking about interest rates, and I was wondering, it's a two-part question. Part one, I have just noticed some SRS, and interest rates going up. SRS should be going up with it, and you see SRS?
Well, Charlie, this is one of the nightmares that I face every day. My computer is totally frozen up. I can see prices moving, but I see what the problem may be. Hold on just a second. I think I know what the problem is. Give me a second. I have it fixed. SRS. Let me see if I have that in there. What is SRS, by the way? I don't.
It's the REIT. It's the inverse of IYR.
IYR. Well, I don't know what is that.
It's a short on real estate.
Oh, okay. Short on real estate?
Right.
Shut the front door. I didn't know they had one of those.
Yes, they do.
Why would anybody short real estate? They don't make that anymore.
Well, I know there's lots of construction guys who work to make it. Yeah, this is more like Simon Property Group, more like Boston.
Okay.
And several of the public storage.
This is really an amazing, because you bring this up, I want to show you. There's that same 5-wave pattern that we've been talking about on the show, and now what you have is you have a head and shoulders pattern forming on this, and this looks like a flat-out sale to me. I mean, this is it's acting worse than the rest of the market, and it has a 5-wave reversal pattern up at the high that was on the 24th of June, and this looks like it wants to go a whole lot lower.
So you think it wants to go lower?
Yes, sir, I do. This is a very negative pattern, in my opinion. If it gets above 23, I'm wrong, but boy, it certainly doesn't look good from here. I posted this into Tiger TV if you get a chance to take a look at it, but you have a 1, 2, 3, 4, 5 expanding triangle. That's one of the most bearish patterns that we have, and it's also one of the most reliable. And then you had the big sell-off that stopped at the 786, and the next thing happened, you had a very small rally to the 382 up around 22 in this, and now it's looking lower to me.
Oh, okay. I'm glad I called.
But Charlie, let me tell you something as a caveat. I am I am without a doubt the worst real estate investor that you could ever imagine. I bought a piece of property in Los Angeles in 1977 that was on a corner, and I held that property for 7 years. It did nothing but go down. Remember, this was in a recession and everything. And finally, I just got tired of selling it. I think I paid $38,000 for it. And today it's worth at least $4 million because it's got a whole shopping center on it. But I was fortunate to get out with my $38,000. So you don't want to ask me about real estate, my friend. I'm very, very poor at it.
Okay. The second part of the question I have, you mentioned that we're having a correction now. You feel there'll be a correction. Any idea how far we're going to go down, or what's your projection? Rough, nothing. I know you don't have a crystal ball, and neither do I.
Yeah. I have a crystal ball, but sometimes it gets a little cloudy. Charlie, I'm not looking for a correction. I'm looking for a major bear market, and I think we got a chance to touch those 2009 lows and possibly even go below it. I have not seen this many bearish patterns across the board ever in my whole career. I think it means something, and it usually means something very, very dramatic, but it's got to do one step at a time. The first time we get below 12,000 in the Dow, if we do, that's really going to shake up a lot of people, and then from there we'll have a pretty good idea of where we might go. But this pattern is formed over weeks and months, and it's going to take weeks or months, to get the objective that you're looking for.
I concur with your outlook. I kind of agree with what you're saying, and I just wanted in my mind to see if we're thinking the same way. Okay, then I appreciate your help, by the way.
Okay, well, thank you very much for calling in. And I after you hang up, Charlie, if you'll stay listening, I will say this. History says that people have to relive history, and I lived through several recessions, one through the 50s, and another one through the 60s, and another one through the 70s. And the folks that are out there now, these young kids getting out of college with these huge debts that they have, and can't even get really good jobs. I mean, this is really, really not very good for a long-term way of building job growth. And I think we're going to have to go through a very, very bad recession and wash out a whole lot of things in order to get it, because if universities are they're charging way too much for what they're giving the students. They're not being prepared in most instances. Now, that's not true of MIT and the big schools and stuff like that, but other students are, and then you've got these online universities that you can get a degree if you can send in a postage stamp. So, that's not right either.
Mm-hmm.
And I think it'll all even out.
I agree. We're in for a big one.
Yeah, well, the question is if I live through it. That's the main question. Listen, Charlie, thanks for calling in. I really appreciate it.
Thank you. Bye.
Okay. Boy, wow, this is my lucky day. In 7 years, I've never had 4 callers in one day. And, Roy, you are the grand winner of the 1 millionth caller to TFNN, and I will have your prize sent to you immediately. Are you there?
I am here. That's pretty cool.
Unfortunately, the prize might be a little less than you're expecting. What can I do for you, my friend?
The VIX, have we bottomed out on this thing yet recently, or what's going to happen?
I thought that the level of around 16 was going to around 15, 16 was going to hold. We're at the 15 level right now. I still think that we're still in this situation where we've had the higher bottoms. If you give me 1 second, I want to update the chart. We're right at the 786 retracement in the VIX as we speak today. We've had the 3 higher bottoms during March, and then again in April, and again in May, and now we're making the last one here at the 786, and it's coming in on the day where I think this cycle in the market is getting ready to to move lower because of the fact that we have these lunar cycles that are there. But I am still very, very bullish the VIX long term. I think it looks very similar to what we had in the Nikkei when it was trading, down around the 9,000 level before it went to 15,000. So that's my feeling on the VIX. It's got higher bottoms, and that's what I was hoping to see happen. I thought it might hold 16, but the last 2 days we've had a lot of strength in the market. I think it was due to the market, rallying into this new moon, but we'll have to wait and see. If we go below 1360, then I would think, Roy, that we've got a major problem.
Okay. Well, thanks a lot, Larry. Appreciate it.
Thank you for calling in, Roy. I appreciate it. And by the way, I love Fort Worth. I think it's a great city.
All right. Well, Tucson's not too bad either.
Yeah, no, I went to a rodeo there once. The only rodeo I ever went to was in Fort Worth, and I really enjoyed it.
All right. We'll talk to you later.
Okay, thanks for calling in. That SRS really looks bearish. I didn't know they had a real estate. Well, they have everything else for real estate, so who knows. Now, someone brought a question up about the crude oil. I wanted to cover that because I think it's a very important part of our economy, because we have a built-in hidden tax with the crude oil. If we we're taxed just because we pay higher taxes. And if you look at the chart on crude oil for the long-term daily, we've completed 3 major ABCD levels up here at this 103.80 level. Now, last night, like I mentioned before, the crude oil got above 104 for just a brief time, and it did it on 15 contracts. I was totally shocked. It was early Sunday night, and it did that, and now it's rallied back to the 103.30 level. And what I'm watching for, in fact, this was something that just triggered, was that we've had a really nice retracement on the crude oil coming in right at the 61% retracement now at the 103.30 level. So it's rallied a little better than $1.10 a barrel. And if you believe that top is in, you have a chance to sell crude oil here at this 103.35, and the 786 is up around 103.90. So you only have to risk about $700 to trade a $103,000 contract, because if it gets above the 786, you're most probably going to be wrong. So that's the strategy that I'm looking at in crude oil at this particular time. The only reason I brought it up so quickly is the beeper went off that it hit that 61% retracement level, and that's one of the things that I watch very closely after a major top has come in. But it's still in a major uptrend, no question about it. All we're doing now is we're assuming that 104 level is a major top. And if it is, then this is a good place to entry. And if it's not, then it's certainly going to move the other way. If I had to mention anything that I think is really worthy, is the fact that we've had this interest rate thing hit the market really badly on Friday with this jobs report, and we stopped at major support on the Treasury bonds, and we stopped at major support on the Treasury notes, exactly at the 61% retracement. And the notes, of course, are by far the biggest of the markets. That's the one that really controls our auto loans, mortgages, credit cards, all of those things. So that's the major important thing that we're looking at. We've got to take a little break here, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I'm going to end the show with the reciprocal of the new, not a reciprocal, it's the same chart as we had with the NASDAQ, only I'm going to use the cash S&P 500 because it's a better index to look at, and it shows the downtrending market that we've had since May 22nd, and we are over, of course, the new moon today, and the moon is at apogee. That means it's as as far as away from the Earth that it is. On the 23rd of June, when we were making the full moon, it was at perigee. And now, on the same day as we're having the full moon, we're having this. It doesn't always happen on the same day. Sometimes it can be 3 or 4 days off because of the wobble of the moon and the fact that it runs in elliptical orbits. But what's important about this cash index chart is the fact that the high that we made today up at this 163.80 was the exact 786 retracement of the high from the 18th when we had the big down move, and it was also the 61% retracement coming off of the all-time high that we had back on May 22nd. So that sets up, a set of lower tops all along in the past month, and as long as we don't go above the 164 level in the cash S&P, this looks like this downtrend could be enforced. If you look at it real closely, you'll see that it has a very nice a set of three drive patterns coming in over the last 7 or 8 days. Each of them was a perfect correction, and the expansion today to the upside at this 163.85 level was exactly at the 1.618. So the patterns are there, the time is there, everything is set for the market to go down. Now, believe it or not, the market doesn't always listen to me. Usually it's about 10% of the time it listens to me. The rest of the time it tunes itself out. But if this does happen to work, it should be a good move, and we should go without too much trouble below the lows of the June 24th level, which were quite significant because it was a big downdraft due to a lot of different things. As far as the news that's out there with the Egypt and all of the other things, I don't factor that into any of the charts because I don't understand what's going on there, and I don't think anyone does either, especially the government, because they don't do anything constructive to fix anything if they could. So all I do is I look at the charts, and if they tell me that there's more buyers, prices are going up, and if there's more sellers, prices are going down. That's the bottom line of what I'm looking for. Finally, I want to mention about interest rates. If you folks are interested or in the market for buying a house on a long-term basis, I think this is the time we should try to, lock in an interest rate. They're probably 4% now for the 30-year bond or 30-year mortgages, and I don't think they're going to get much less than that. I think they got as low as 3.2 at one time from what I could see off the internet, but it looks like interest rates are going higher. And if you can get a rate at 4%, frankly, I don't know anybody that I would lend money to at 4% over 30 years. But the people at the government have everybody lining up, wanting them to do it, and that's not a very good thing to do when you have everybody on one side of the market. The last chart that I wanted to show was the. If you'll give me a second, I wanted to show the. If I can get it here. I wanted to show the silver chart here on a longer term basis because we have made a 786 retracement in silver a few weeks ago. That's it, folks. We got to take a break. Live every day in an attitude of gratitude, and may God bless.